Shorting into this volatile market has been a profitable trade for short sellers. However, as markets rocket higher following President Trump's tariff pause, we're diving into what this means for short trades. Ihor Dusaniwsky is with us, S3 Partners Head of Predictive Analytics. It is great to see you, especially on a day like this. Ihor, you tell me, this feels to me, today's trade felt to me like there was definitely some squeeziness happening, short squeeze is happening today, but I'm curious what your data is telling you.
Easy come, easy go.
Yeah, I guess so.
We were, the shorts were up $159 billion in P&L, in mark-to-market P&L in April. Looked like there was going to be a little bit of hovering, when people looking to realize some of their profits. Today's trading is just crazy, and I'm not sure how many people were able to cover their trades and save some of their profits. But there definitely was some short covering in the momentum guys and the guys that were getting into hedges.
Ihor, you're a long-time student of the markets. I'm just curious to get more your broad take on what we saw today. I mean, as someone who studied the market a long time, the headlines, the response, the reaction, what did you make of it, Ihor?
Keep your head down, and I mean, I just don't see what the smart bet is right now. What we're seeing is a little bit of deleveraging from some of the hedge funds because there are margin calls when the market takes a downturn. But there's also short selling because they're looking to play the other side of the market. So we're seeing activity on both ends. We're going to see a lot of buy to covers in a lot of names that were moved up high really quick because these were short-term bets.
Where have you been seeing this month so far? Where have you been seeing the biggest increases in short interest in terms of sectors?
Well, first of all, you got ETFs. Guys are using ETFs as hedging strategies. So you've got the SPY, the QQQ, the IWM, and fixed income ones like the TLT, HYG, where instead of going in and having to short a whole basket of names, they're just shorting a large cap ETF. But we're seeing a lot of short selling in financial services, capital goods, software and services. Stocks like Caterpillar, Boeing, Eaton Vance, Vertiv on the capital goods side. Financials, you're seeing Apollo, Coinbase, PayPal, JPM.
I mean, did all this stuff just get blown out today? I mean, everything you're describing, I mean, everything went up today, but everything you're describing is stuff that definitely went up today.
Oh yeah. I mean, everyone who had a pocket full of money is now reaching into a little dusty pocket now with nothing in it. We've got, this happens. I mean, the market is so volatile with President Trump in the White House. We're seeing these moves up and down on a daily basis. If you're a momentum trader, I mean, you might have a great day, you might have a crappy day. It all depends on what happens with the tariffs and what happens with bonds.
When you said, Ihor, I think you said shorts were up 159 billion in April. Can you break that down for us a little bit? Like, what were the most profitable industry groups, sectors to short, and what were the least?
Energy was a really profitable short. Semis was a great short. What else was there? Pharma, biotech was an excellent short. There really were no bad shorts. What happened? We did analysis of the market, and we found that 81% of all stocks that were shorted were profitable. 97% of every dollar shorted was profitable. So I really don't see names on the back end that were in red numbers. In size. This was basically, shooting fish in a barrel.
I know you were looking at the fixed income ETF side of things as well, because the action there was intriguing, puzzling to some. What were you seeing from your end?
Yeah, we saw a large increase in ETF short selling, and I think this is more hedging than anything else. There's a lot of people that want to trade ETFs as a hedge to their portfolio, hedge to Fed moves. But don't have the wherewithal or the expertise to trade specific bonds. So what they'll do is they'll trade the TLT to get some treasury exposure. On the corporate side, they'll do HYG and LQD, which are the high yield and corporate bonds. And we've seen just $8 billion worth of short selling so far this year, $2.6 billion worth of short selling just in the last 30 days. So there has been a lot of moves. I mean, shorts were down over $800 million, almost $800 million in the first quarter of the year. They're up $1.3 billion in April. Again, today, with rates coming back up to 4.3%, we'll see what happens on the P&L reports tomorrow.
We shall see. Ihor, always good to see you and to have you on the show. Thanks for joining us.
Great to be here. Thank you.